my approach on yesterday market using G40 chart. Yesterday I was expecting a buy trade on this market. This was a zone I was expecting the market to come back and take out. This was a zone I was expecting the market to come back and take it out yesterday. But that didn't happen. That didn't happen. This market kept pulling down. The reason why I was expecting the market to come back and take this zone out was because the market was bullish on my bigger time frame. On my bigger time frame, this market was bullish. This is what happened on my daily charts. On my daily chart, you can see that the market was bullish. The market was breaking structure to the upside. So I was expecting to buy this market up. So upon me going to my M15, I was expecting this market to give me a break out from this zone using my London sessions indicator. I was expecting it to break out of this high for me to be able to take a buy trade. But what happened was this market kept pulling down. But as far as daily chart was up, I wouldn't want to take any sell trade. But instead, I was looking down, expecting a zone that will possibly give me a buy in this market. So when I moved down to my H4, when I got down to H4, I discovered this zone right here that led to break of this very structure. I discovered this zone right there, which led to break of this structure to the upside. So I marked this zone out, which I posted on my channel yesterday. So I marked this zone out using my M4, my H4. I marked this very zone out using my H4 yesterday. So upon this market coming into this zone, that was during, I went down to my M5. I went down to M5. This is you using multi-time frame analysis. This is you doing multi-time frame analysis. So when I went down to my M5 on the zone, here was the zone. I have to extend the zone. Here is the zone. I had to expand the zone. So I extend that zone and this market came into this zone. As the market came into this zone, I was observing something. I was looking for a break of structure to the upside for me to take my trade. You see this market. This was the leg that led to this zone. This very leg was the one that pulled inside this zone, give us a push, pull inside again, okay, break structure, give us a push, pull inside right there, and break structure to the upside. Returning back to the structure was where I was expecting to take my trade. So this is what happened yesterday. Returning back to this structure was where I wanted to take my trade. I had to move down to 1 minute. I moved down to 1 minute. On my 1 minute, so I moved down to 1 minute. On my 1 minute, this is where I placed my trade. I placed my trade right here, right at this. This is where I placed trade. My stop loss was very tight. This is how I placed the trade yesterday. This trade supposed to have given me 1:50. My stop loss was just beneath because I didn't expect this market to come and grab that zone anymore. So that was how I placed my stop loss. But you see what the market does. The market came in and smashed me out of this zone. This is what happened. It came in and smashed me out of the zone, and then this market kept running since yesterday. It kept running. You see, here, this very zone here, this high right there, supposed to be my TP. And you can see from that entry to that point, supposed to have been 1 is to 85. Supposed to be 1 is to 83. But what happened? The market smashed me out. And today morning, this market has just hit where we expecting it to go. And again, this today making it since the market is still bullish, today again, when I woke up, the market was bullish. I was expecting it to come to this zone for me to take a buy, which I've sent it to my channel. That was after this market was able to break above this high. The market didn't come back. Upon me marking this very zone, upon me marking this zone right here, I was thinking because of this big imbalance right here, that if the market take out all these liquidities here, it may come into this zone. So I was still checking on this zone. At same time, no, this zone is not valid for me. This very zone was not valid. I did not mark this. It wasn't valid. So this zone here and this zone below was where I marked, expecting the market to come into it for me to take a trade. But the market didn't come into. I don't know, maybe if that I was able to I marked at that very zone, I would have been in this trade based on that is the last bearish candle. Based on that was the last bearish candle. If that I marked at this very zone, maybe I would have been in this very trade right there. Though I marked based on this green inside back candle inside here. So that was where I marked, and the market came and tapped into the bearish candle, which if it happens that I've gone to my 1 minute chart, maybe I would have been opportune to be in this market today. I would have been opportune, or it would have been a loss for me, because upon this market coming in, you see the wick. Okay, the market came inside this zone with just a wick, so I wouldn't have taken the trade. I wouldn't have. So that is it for today. So that was what happened yesterday, and today no entry, making it Wednesday of this week right there. Yesterday I had an entry, but just few pips make the market to kick me out of this market and still go in my direction. So when you are trying to take a sniper entry, these are most of the things you are going to face in this market. This is to say, it's not how you want the market to go that the market will go. The market must surely do its thing. It's for you to keep to your rules, follow with your rules. If not, you will be trying your best to make sure that you take a trade and you end up having a loss in this market. So you have to be guided. You have to tighten your belt and try your best to stick to your rules. When it comes to trading, if you cannot stick to rules, that means you have not started. You should learn to sit up. The market must come to you. Your strategy cannot be working every day. There are some weeks you just place a trade, you take losses. But the upper week, once you just enter a trade, it takes you to 1 is to 50, 1 is to 60 as you want. This thing will keep happening. You just have to try your best to make sure you stick to your rules. If you do not have an entry that very day, you don't take a trade, you stay back. That is why it is available for traders. It is advisable for you to have another thing to get busy with when you are not doing trading. There are many things online for you to get yourself attached with when you are not trading, so that you will not be eager for you to be trading all the time. Even when you do not see your setup, you'll be forced to trade. So this is what happened yesterday, and today. So let's hope for tomorrow and see what the market will give us. Don't forget to subscribe. I remain Aqua FX as I sign out.